Welcome. I am so glad you could join us today. I want you to start by just, picturing a skyline in your head.
Oh, yeah, like a really specific kind of skyline.
Right, right. Not just your average downtown. I'm
Right.
talking about one of those gleaming, hyper-modern testaments to limitless wealth.
Right.
Imagine towering glass skyscrapers, sprawling man-made islands stretching out into azure waters.
Luxury penthouse suites everywhere.
Exactly. Entire ultra-modern districts built on this implicit promise of absolute, unshakable security. But now, I want you to imagine that same pristine skyline suddenly shaken by the very harsh, very immediate reality of geopolitics.
Alarms sounding.
Yeah, missiles in the air. You really have to ask yourself, how quickly does a multi-million-dollar penthouse lose its appeal when the airspace right above it becomes an active conflict zone?
It's a really jarring image, but it is the exact scenario we're analyzing today.
We're exploring how an aura of safety, an image carefully and honestly expensively cultivated over decades, can be relentlessly tested in an absolute instant.
Right.
And to guide us through this, we're pulling from a fascinating piece of source material. This is an article dated March 6, 2026, published by Jamaica Homes News, titled "Missile Strikes Raise Questions Over UAE Property Boom."
A really insightful piece.
It is. Our mission for this deep dive is to explore how geopolitical shocks in one specific part of the world can instantly rewrite the rules of global property investment everywhere else.
We're really looking at the mechanics of international capital flight.
Exactly. And why stability might just be the single most expensive and fragile amenity in all of real estate. Okay, let's unpack this.
It's a phenomenal starting point because we so often think of real estate as, entirely tangible.
Bricks and mortar.
Right. Bricks, mortar, steel, glass. We think of it as a highly localized asset.
Yeah.
But what we're really looking at today is how real estate at this macroeconomic level is actually built on something entirely invisible.
It's built on perception.
Exactly. Perception and international confidence.
And that perception has just taken a massive, massive hit in the Gulf. The factual trigger for our discussion today is rooted in some very intense recent events outlined in our source. We are looking at missile strikes linked to escalating tensions with Iran.
And we aren't talking about isolated incidents in remote deserts here.
No, not at all. These are attacks targeting airports, vital shipping ports, residential areas, even high-profile districts right in the United Arab Emirates.
Which is incredibly significant when you consider the brand the UAE has built.
Oh, absolutely.
For years, cities like Dubai and Abu Dhabi have successfully positioned themselves as the ultimate safe havens. They operate as these untouchable global hubs for wealth.
Yeah, they draw buyers from Europe, from Asia, really, from all over the globe.
Precisely because they offer an oasis of calm in an otherwise turbulent geopolitical landscape.
But what actually happens on the ground, financially speaking, when those sirens go off? I mean, if you're a high net worth individual, you put your money there because you believe nothing bad is going to happen to it. Now, suddenly, investors and lenders are having to rapidly reassess the risk across the entire property sector in the Gulf.
What's fascinating here is the immediate psychological and financial impact. Real estate, perhaps more than any other asset class, relies heavily on predictability.
Yeah, you need to know what you're getting into.
Exactly. If you are buying a home or, funding a billion-dollar commercial development, you absolutely need to know what the neighborhood and the regional economy is going to look like in 5, 10, or 20 years.
And when missiles fly, that predictability just vanishes.
Completely. And we are already seeing the fallout. Look at developer shares in Dubai and Abu Dhabi. They plummeted almost immediately after the strikes.
Right, and it isn't just the equity side taking a hit. The source points out that the prices of bonds tied to property firms have also declined. How does that specific drop ripple through a developer's day-to-day operations?
Well, a declining bond price means the yield is going up. And that translates directly to a spike in the cost of borrowing. International bond markets are the lifeblood for developers across the Gulf.
Because they need that cash to build.
Right. It's how they finance all this new massive construction. They rely on cheap debt. When the perception of risk goes up, borrowing costs become financially prohibitive.
Or worse, the funding gets cut off entirely.
Exactly. We're already seeing reports of lenders hitting the pause button on new property-related fundraising while they step back to reassess the broader security environment.
I want you, the listener, to just imagine this for a second. Imagine you are committing vast amounts of capital. Maybe you manage a massive investment fund or a family office, and you are placing it in a foreign country.
Millions or billions of dollars.
Right. Think about how incredibly fast your underlying psychology shifts.
Yeah.
One day, you are looking at spreadsheets, trying to maximize your return on investment.
Playing offense.
Yeah, playing offense.
Mm.
The next day, there is a tangible security threat, and your brain entirely shifts gears. You no longer care about maximizing return.
You only care about protecting the principal.
Exactly. You just want to make sure your money and potentially your physical safety is secure.
That pivot from wealth generation to wealth preservation happens overnight. And when international capital gets spooked, it doesn't just wait around to see how things play out.
It prepares to move.
It packs its bags.
You look at the post-pandemic timeline of the UAE market, and the growth curve goes almost completely vertical. Property values in Dubai jumped about 60% between 2022 and early 2025.
60%.
60%. That is wild. How does a market absorb that much wealth that fast without collapsing under its own weight? Was it just, post-pandemic revenge spending, or was the government actively engineering this boom?
It was heavily engineered, and that is the tightrope they are walking. That 60% isn't just organic local growth.
Right.
That is a fire hose of global capital. The UAE government made some very deliberate, very effective policy choices to capture wealth that was fleeing uncertainty elsewhere.
Like the tax.
Yes. They leaned into their zero income tax advantages. They relaxed visa rules, making it easier than ever for wealthy individuals to relocate not just their money, but their entire family offices and business operations right to the Emirates.
So you essentially have global wealth looking for a home after the chaos of the pandemic, and the UAE just rolls out the red carpet.
Exactly.
Capture all this capital.
Yeah.
But here's where it gets really interesting. The true vulnerability of this massive influx of cash lies in how these properties are actually being purchased.
Yes.
The entire system is heavily reliant on the off-plan development model.
And in Dubai, off-plan isn't just a niche strategy for early bird investors.
No.
It is the dominant force driving the entire market's momentum.
The data in the article shows that in Dubai alone, off-plan purchases accounted for roughly 2/3 of all property transactions last year.
2/3.
2/3 of the market is transacting on properties that do not physically exist yet. You aren't buying real estate. You are buying a blueprint and a promise.
If we connect this to the bigger picture, the off-plan model is essentially a massive collective bet on the future.
Yeah.
It requires absolute unshakable confidence. Buyers are committing their funds years before a building is finished. They are handing over substantial deposits based on the expectation that future demand will be there, that the country will remain politically stable.
And that long-term market growth is an absolute given.
Right.
But when 2/3 of your market is transacting on future promises, you are trading pure investor confidence.
Precisely. And when those missiles fly, that long-term confidence is severely shaken.
Because off-plan sales aren't just a way to gauge interest.
No, they are the primary funding mechanism for new construction across the Gulf. Developers use those buyer deposits to fund the actual building process.
If the buyers get scared,
and those off-plan sales dried up, the cash flow stops. Construction halts. You risk a cascade of stalled projects. Now, to be fair, industry executives in the UAE are actively trying to calm the markets.
sure, they have to.
They're pointing out that the Gulf has weathered severe crises before. They argue the underlying economic fundamentals and the infrastructure remain strong.
But whether that confidence holds depends entirely on momentum. Real estate investment at this scale is a momentum game.
Absolutely.
If investors believe the geopolitical disruption is a temporary blip, they might hold their positions. But if they start to believe this is a new, more dangerous status quo, they pull back.
And pulling back right now would be catastrophic.
Because this missile crisis did not arrive at a convenient time for the UAE property market.
Not at all. It arrived at a remarkably precarious moment. Even before the attacks happened, analysts and economists were already waving red flags about a potential massive oversupply of housing in the pipeline.
The construction engine was running so hot that it was threatening to outstrip any realistic measure of long-term demand.
The numbers in the pipeline are frankly staggering.
Yeah, let's talk about those numbers. Estimates show that between 300,000 and 400,000 additional homes are expected to be delivered in Dubai alone by 2028.
400,000 homes.
That isn't just building a few new subdivisions. That is the equivalent of dropping an entirely new major city directly onto the existing market in the span of a couple of years.
That is a staggering amount of supply to absorb, even in the most optimistic booming economic conditions.
Yeah.
It requires a relentless, uninterrupted influx of new residents.
Which brings us to a highly unique demographic reality of the UAE that fundamentally changes how you have to view that 400,000 number.
The expat ratio.
Exactly.
Mm.
The UAE population is over 11 million people. But expatriates, people who are not citizens, who are only there for work, business, or investment, make up nearly 90% of those residents.
90%.
That is one of the highest proportions of expatriates anywhere in the world.
Which exposes the deep structural fragility of their housing market.
How so?
Because the population is so heavily weighted toward transient expats, housing demand is uniquely and precariously tied to global migration trends and international business confidence. Think about a more traditional real estate market, say, in the US or the UK. If foreign investment dries up, or if the global economy wobbles, you still have a massive base of local citizens forming households, starting families, buying homes.
They aren't going anywhere.
Right. That domestic demand provides a safety net. It eventually clears the excess inventory. The UAE simply does not have that domestic cushion.
So if the current geopolitical instability causes overseas investor appetite to weaken, if those expats decide it is no longer safe to keep their families there, or if international firms pull their staff out, there's absolutely no way for the local Emirati population to absorb a tidal wave of 400,000 new homes.
None.
You wouldn't just see a dip in prices, you would be looking at entire glittering skyscrapers sitting completely empty.
The structural vulnerability is profound. It means the market's success is entirely dependent on forces outside of its own borders.
Yeah.
If the world feels safe and prosperous, the UAE booms. If the region feels dangerous, the UAE's property market faces an existential threat from its own staggering oversupply.
So this brings up a really interesting meta question. How does a localized geopolitical crisis in the Middle East end up dominating the discussion in a Jamaican real estate publication?
That's the real crux of it.
Right. Why is Jamaica Homes News dedicating resources to analyzing a property boom thousands of miles away?
It speaks to the core reality of modern global economics. Modern real estate simply no longer operates in isolation.
Right.
It is not a local game anymore. International capital is incredibly fluid. It acts exactly like water. It flows away from resistance, friction, and danger, and it flows towards safety and opportunity.
When high net worth investors or institutional funds lose confidence in one region's stability, like we are seeing with the UAE right now, that money doesn't just evaporate.
Yeah.
It moves. And it moves at lightning speed to find new, more favorable conditions elsewhere. If a family office in London suddenly decides that a luxury high-rise in Abu Dhabi carries too much geopolitical risk, they don't just put that money in a savings account.
They look at a map.
They look at a map and ask, where is this stability?
And that is where emerging markets, and specifically markets in the Caribbean, see a massive opportunity. The ripples of a geopolitical shock in the Middle East are absolutely felt on the shores of Jamaica.
The dynamics playing out in Jamaica are fascinating in this context.
Right.
Obviously, Jamaica's market operates on a much, much smaller scale than a major global financial hub like Dubai.
Sure.
But Jamaica is increasingly attracting those exact same profiles of overseas investors. The article notes we are seeing a significant influx of returning diaspora buyers, people bringing foreign wealth back to the country,
Right.
as well as international developers who are pouring hundreds of millions into large-scale luxury tourism-related projects.
This raises an important question. How do we actually define the value of a property on a global scale?
Right.
We tend to think of value in terms of the physical structure, the square footage, the quality of the marble countertops, the architecture, the view of the ocean.
The things you can take a picture of.
Exactly. But real estate at this level is rarely driven by the buildings alone.
It is shaped almost entirely by the environment it sits in.
The true value is derived from confidence in a country's underlying institutions. It is about safety, governance, and the long-term economic trajectory of the nation.
Yeah.
When a global investor is deciding where to place $100 million for a new eco-resort, those institutional factors matter just as much, if not more, than the physical location itself. The building is secondary to the stability of the ground it is built upon.
And that is where Jamaica is positioning its long-term advantages. When capital flees a conflict zone, it is hunting for three very specific types of stability.
Political, economic, and environmental.
Political stability, economic stability, and environmental stability. As global uncertainty rises, places that can offer those three pillars become increasingly valuable on the world stage. Jamaica is making the case that it offers a democratic political environment, a stabilizing economy, and an environment right for long-term development.
The episode currently unfolding in the Gulf is a stark reminder to developers and investors everywhere. You can build the most luxurious, technologically advanced tower in the world
With zero income tax.
with zero income tax and a streamlined visa process. But if the airspace above that tower isn't safe, the value of that luxury plummets instantly. Stability is the foundation of all real estate value.
Which perfectly brings us to the core takeaway from today's deep dive. Real estate thrives best where confidence feels secure. It is really that simple.
It is.
As global uncertainty continues to rise, whether from geopolitics, economic shifts, or regional conflicts, the markets that can demonstrate true resilience and predictability are going to quietly but surely capture the world's wealth. Confidence, much like property itself, is built slowly over decades.
But it can vanish in an absolute instant.
Yes.
It takes decades of careful planning to build a reputation as a global safe haven, and only one missile strike to call it all into question.
So what does this all mean for you listening right now?
Well, whether you are saving up to buy your very first home, or you are a professional analyzing global markets for your work, or even if you are just a curious person trying to understand the evening news, you have to look at these towering skylines differently now.
They aren't just collections of concrete, steel, and glass.
They are physical, tangible manifestations of human confidence. When you see cranes in the sky, you are looking at confidence in the future. And when the cranes stop, you are seeing fear.
We've spent a lot of time discussing how quickly capital will flee geopolitical risk in search of environmental and political stability.
Yeah.
But if we take that logic just one step further, it leaves us with something quite profound to consider.
Okay.
If the ultimate amenity in real estate is stability, we have to look at the other major forces threatening it.
Right.
In an age where climate change is accelerating, what happens to the global flow of real estate wealth when rising sea levels and extreme weather begin to threaten the very cities we currently consider to be the world's ultimate safe havens? That is a great point.
Geopolitics is moving the money today, but what will move it tomorrow?
That is a massive question and exactly the kind of critical thinking we love to spark here. A huge thank you to you for joining us on this deep dive. Keep questioning the headlines, keep looking past the concrete, and we will see you next time.